Well, hello, folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. All right, let's pull up the screen. We've got our fourth quarter earnings. Been waiting on those. They just came out a few minutes ago, hot off the presses. And let's get into them and talk about it. All right, we've got NIO's unaudited fourth quarter and full year 2021 financial results. Okay, we know they delivered 25,000 vehicles, a 44% increase over last year's fourth quarter. And remember, in this fourth quarter, even though it wasn't up much over the third quarter, remember they were shut down for about 2 weeks because they were not only bringing up the line for the ET7, but also increasing the capacity to produce at the JAC factory. So that pushed this down more than it would have been had they not obviously had to be down for almost 2 weeks. But as you can see, they still had a nice increase over 2020. Not as much as you would expect compared to the other quarters. Total revenue of $1.553 billion in the fourth quarter, representing a 49% increase over the fourth quarter of 2020. And they had a similar gross margin, 17.2%, versus the fourth quarter of last year. And again, in the third quarter, they were at 20.3. Realize they had a bigger increase in deliveries, again, because of that 2 weeks. Now we're going to get into the loss from operations. They had $383 million, which represents a 162% increase from 2020 fourth quarter. We're going to talk about that. And they talk about the share-based compensation. They did have some expenses that were higher than normal on that. Realize that's a non-cash event, but it does count as an expense, and it does dilute the company a little bit. And it shows they had a 21 cent per share loss, and then minus the share-based compensation, it dropped to 16 cents. And I think that's a little bit higher than what the analysts were expected, I think a little bit. And let's see, for the full year, of course, they were 118% up on revenue compared to the previous year. And the margin was obviously a lot better, vehicle margin of 20% versus 12.7%. That's a great increase. Gross margin 18.9% versus 11.5%, another great increase. And let's see, net loss of $630 million for the full year, a decrease of 24.3% from the previous year. And here you've got the CEO, William Li. He said, "We concluded the year of 2021 on a strong note, annual delivery of 91,429 vehicles, which is a 109% increase." Said, "Despite all the challenges, including the supply chain volatilities in particular, not to mention the Rona, in light of the seasonality and the Chinese New Year holiday, NIO delivered 9,652 vehicles in January, 6,100 we know in February." Says 2021 had been a year of making decisive investments in products and technology, as well as in power and service infrastructures. It had also been a year of elevated operations in fast iterations, supply chain response and innovation, product capacity expansion, and systematic quality management to make comprehensive preparations for our development in the next phase. On top of our growing user base in China, 2021 also marked the beginning of our global market expansion, starting from launch and deliveries in NIO vehicles in Norway in September. Now, here's important. It says 2021 will be a year of re-acceleration for NIO. We will deliver 3 new products based on NIO Tech Platform 2.0. In March, we kicked off the test drive ET7 and will start its delivery on the 28th. After the launch of the ET5 in December 2021, we received great feedback from prospective users and expect to start its delivery in September of this year. In addition, we plan to offer our products and services in more countries and regions in 2022 to further expand our global use community. So if you want to know why they aren't making money, and like I say, in the first quarter, they only lost $40 million. So the reason they've increased that is because research and development has kind of skyrocketed, and it had to. Because if you think about the fact, they're designing 3 new vehicles. The ET7, which they'll deliver in a few days, the ET5 is coming out in September, and they're working on a 3rd car. Okay, not only that, they're also working on a sub-brand. So there's just so much research and development besides the fact of the autonomous driving, which is going to be a huge driving factor in the profitability of this company long term because it's software as a service, which typically is around 80% profit margin. And that's a lot of money up front for software as a service, and then you make the money on the back end. Well, that's going to be really critical. And this right here, research and development, has to be high. Now, understand at some point this will plateau, but the revenues will not. The revenues will continue to rise as they build this company, but this will eventually plateau. And here's general administrative. Here's the other expense that went way up. And again, that's building the NEO houses. That's the battery swap service stations. That's all the things they need for the infrastructure. And they talked about the fact they've had to hire people, obviously, for service and for taking care of the customers. So those are your two big expenses that really told the tale in the fourth quarter. And then being shut down for almost 2 weeks in that fourth quarter, they didn't have quite the revenues to offset it. But again, they needed to do that in order to have the big numbers in the future. So like I said, when you look at these deliveries, remember they had an October that was just a total bust of 3667. That should have been up around 10,000. That extra 7,000 or 6,000 vehicles they would have made a big difference in their profit and loss statement for the fourth quarter. But again, that's something that had to be done. All right, folks, and that's fourth quarter earnings. Like I said, it's sort of a mixed bag. I'm not too concerned about it. It's kind of what I expected. I fully expected the general administrative and the research and development to go up. There's a little bit of an expense there with the stock-based compensation, but these days that doesn't surprise me at all. That is a non-cash event. I don't care for it, though, because there's a little bit of dilution in it, but it's not that big a deal, especially for a company this size. But like I say, I consider this kind of a mixed bag. But again, given the bad October they had to have, I'm not too disappointed with it at all. I don't think it'll have too much of an effect on the stock. It might dip just a little bit, but it's nothing major one way or the other. The fundamentals of this company have not changed. So pretty close to what I was expecting. And if you like this content, be sure to hit that like button. Lets me know to continue to cover NEO. And I put this together pretty quickly because we literally just got out the numbers and I had to put the graphs together. So, I may go over it again later in the next couple of days and I'll be talking about it. And if you haven't subscribed, hit that subscribe button. I'd certainly appreciate it. And we'll see you next time on Mr. Frugal Investor.